Once again, good morning and welcome to the session on Union Budget 2022, where we will aim to provide you a holistic view of the budget, followed by an interactive Q&A session. Our speakers for today are Pranjul Bhandari, Chief India Economist, HSBC, who will share the highlights and economic view of the budget. Welcome, Pranjul. Our second speaker for today is Rajat Verma, MD and Head Commercial Banking for HSBC India, who will provide us insights into the broader industry view of the budget. Hi Rajat, welcome. And our moderator for today is Gaurav Sehgal, Managing Director Corporate Banking Western India and Country Head for International Subsidiary Banking for HSBC India. Morning Gaurav, welcome to you too. Please do note that this session is being recorded. Do post your questions using the Q&A tab at the bottom of the screen, and we will take up your questions and attempt to answer them towards the end of the session. With this, I hand over to Gaurav to take the session forward. Gaurav, over to you.
Thank you, Neeti. A very good morning to all our friends who have taken our time to attend this session with us today. I'm sure a lot of us have read a lot of publications since the budget presentation, and this is our attempt to try and make this session a little bit more relevant from a business perspective. If I may, Pranjul, start with you and let's get straight to it. I'm sure you've done a significant amount of analysis prior to the budget, during the budget, and I'm sure a ton of it post the budget. But given the positivity that's come across various publications around it, I want to begin by asking you that in your pre-analysis, is there something that you felt that this budget should have stressed more upon, and why?
Great. Look, that's a good question. And, thanks for having me here. So, the big thrust of this budget, and I'm sure a lot of people are already following that, is the CapEx push. But it was a CapEx push during a pretty difficult time, during a time when the government was trying to bring down the fiscal deficit and generally reduce expenditure. So tough choices had to be made. And the one cost that we've incurred in the process of higher CapEx is lower social welfare spending. And that has been a choice that the government has made. So let me sort of explain what I'm trying to say. There is definitely a CapEx push. When the finance minister was reading out the budget, she spoke about a 35% year-on-year increase in CapEx. A lot of people ask, is this even realistic? It basically means 0.4% of GDP higher CapEx in FY23. Generally, we see a lot of implementation problems on the ground in India. Will this really work out, or is it just some number which will be, lead to disappointment later? My sense is it's actually realistic. And it's realistic because of the way it is designed. This time, it's not just the central government who's going to implement this CapEx, but the central government and the state governments. A large part of this increase this time is going to be interest-free loans made to states, which the states can use in the form of any CapEx that they want to do at the state level. So in that sense, the implementation burden is going to be shared between center and state. And that is what I think will make it implementable. And I do think the CapEx thrust is realistic. Some other people say that, look, you can't just look at central government outlays on CapEx. In the same budget, we also got the CapEx outlays of public sector enterprises, things like NHAI and so on and so forth. And if you look there is a fall. And look, I agree with that. And actually, if you put the two together, central government and public sector enterprises, the year-on-year growth is 19%. It's not as good as the 35% announced by the finance minister, but 19% is still a good number. So, look at it anyway, I think the CapEx thrust is real. But then the other side of the story is that social welfare spending has been cut. The NREGA, the rural unemployment guarantee for wage for work in rural India, the outlays for that has been cut at a time when we know that for 2 years in a row, demand for the scheme has been outpacing supply. There is demand from the distressed sectors, in India, the bottom of the pyramid, and that sort of support has not been highlighted in this budget. Even things like housing, the budget has been kept sort of unchanged. It hasn't been really increased in any way. So we've had a CapEx push, but at the cost of lower social welfare spending. You will ask me, so what was the government thinking? Well, I think the strategy of the government is that when you give a handout to somebody at the bottom of the pyramid, it's a very temporary help. You give a daily wage for 1 day, for 24 hours, and then he has no other support in the next 24 hours. But when you do CapEx and you create jobs, you give him a permanent support, you give him a good job. And the whole idea was that when you have limited resources, you want to move from temporary help to something which is more permanent and long lasting. And I think that is what the budget's focus was. My only hope is that I wish they had continued for social welfare schemes for a little bit longer. Sorry, long answer to your short question.
No, sure, Pranjul. No, thank you. It's very relevant because I'm going to move to Rajat immediately, and it's music to our ears the minute we hear capex, and the way you kind of explained it or articulated was really very relevant. But Rajat, two parts to my question, if I may. You've had the opportunity to speak to a number of industry leaders. So, how has the budget landed with them in your various conversations over the last 48 hours? And B, what is the one thing that was a hit, and what is the one thing that was a miss in the conversations that you may have had with them over the last 48 hours?
These are very good questions, very difficult ones as well, Gaurav. But I'll try to attempt to answer them. I think people are still digesting the details of any budget, and different industries are trying to see what this means to them. And some of the proposals will be threshed out in the coming months. So I would say these are preliminary reactions. By and large, the thing that strikes most people that I've spoken to is that there is a thrust on infrastructure, but on two types of infrastructure. The one Pranjul spoke about, which is the capex spend, etc., all the multimodal transport, all the talk, a lot of the budget was, speech was focused on that. And I think the other part of the budget, which was often repeated, and if you know all the news articles on the keyword searches, etc., the other type of infrastructure that the government really spoke about was digital infrastructure, which is clearly a positive. It's quite important for the government to not only sort of talk about it, but show the way. And there were several parts of the budget which talked about what they're going to do on digital infrastructure, which I found a lot of people did pick up and were encouraged by. Of course, I think Pranjul mentioned as well, a lot of this is in how this gets implemented and how soon and how quickly. But certainly that to me has no cost to it and has only an upside for it, which I'm glad that the government recognized and was taken up. I think on those, I suppose this is a budget where the government's trying to say that, look, we're thinking of the long term. We're not thinking of populist measures, etc. And this is, whilst there's some state elections, it's not, it's still far away from the national elections. So to that extent, there were none of the populist measures that you saw, and the argument that some of the social welfare schemes are sufficient or don't need to be expanded, perhaps came out clearly through the budget. So if you look at the stock market, of course, it's going up very well. After it's had a good response to the budget, and I think part of it is that the market did not want too many freebies or negative surprises. If nothing else, it's a stable budget, and I think that's what I'm hearing from a lot of people.
Excellent. No, thank you for that, Rajat. Let me go to an economist's favorite question, Pranjul. GDP. Finally, what's the verdict on that? What's your view? What is the budget going to do towards the whole GDP growth? And more clearly, firstly, what is your view on the GDP growth, and what's the role of this budget to enhance it, or in your view, grow it?
Yeah, look, I'm glad you brought it up because, every budget is, in a sort of macro backdrop. So it's important to understand that. Look, my sense is that growth over the next 2 quarters is going to be extremely strong. And it's going to be extremely strong, led by pent-up services demand. In the same way, in the few months after the Delta wave last year, we had very strong recovery led by pent-up goods demand. At that time, many of us were not vaccinated. Now we are. Now, as the Omicron wave passes, we'll go out and consume all of those services which we've been dying to for the last 24 months. So I think, and that can be very significant in terms of growth impact. So next 2 quarters, strong growth. The problem is that pent-up demand, by definition, runs its course at some point. It fades. We saw that towards the end of last year, pent-up goods demand had faded a little bit. So my problem is second half of the year, when pent-up demand for goods is gone, for services is gone, what will lead growth? What will drive growth? And at that point, we could see growth slowing and we will be scrambling for new drivers. The big hope is that we get a new driver then, And the new driver is a new investment cycle. Now, is that possible? Well, we have been waiting for investments to rise in a big way for the last decade, and it has disappointed in many parts. But this time around, some things are positive. The positive part is that some of the large corporates have much better corporate balance sheets this time. Through the pandemic, they have been able to write off debt, they have been able to delever, so their balance sheets are healthier now than they were, at the start of the pandemic. So that is a positive for investment. But unfortunately, that's only a necessary condition. That's not sufficient enough to start a new investment cycle. More things need to fall in place. And one of the things is policy certainty and growth certainty. Investors must get a sense that there is policy stability, predictability, credibility, and also they should be able to have a good sort of outlook on GDP growth in the next few years. Only then they are going to put money on the ground, for multiple years. And that is where we are lacking right now. With so much of global volatility, a wave after wave, commodity prices being so volatile, central banks changing stance, all kinds of chip container shortages, the whole global environment is very volatile. So in that backdrop, I think the budget could have, going into the budget, I had three expectations. Number one, become a source of stability and credibility at a time the global environment is extremely volatile. Number two, do some high quality capex spending, which if continued over time brings confidence and crowds in private sector capex. And number three, don't forget the bottom of the pyramid, because in India, it's large. It's about 40% of the labor force. And if they have lost wages and income, then the fall in their demand can actually hurt growth over time. I had these three asks. My sense is that the budget delivered on two of the three. As you know, as Rajat was also saying, it was a source of stability, stable taxes, transparent numbers. It did capex. I think the only sort of place where I wish they had done more was social welfare scheme. So I think 2 out of 3 is sort of my sense. Before you would ask me to give a score.
No, excellent. I think that's again very relevant, because what you talked about, the whole capex spend in terms of public versus private. I mean, let's not forget, and if I have my numbers correct, you still have a capacity utilization of sub 65%, right? So obviously, from a capacity build up to happen from a private side, the necessity of healthier balance sheets is very, very relevant, which is, as you rightly said, one of the conditions, not the only one. So let's wait and watch on that space. But the other interesting factor about this budget, two aspects. One is the whole definition of virtual assets and the tax around it. But I think from a banker's point of view, it is the launch of the CBDC, or the central bank digital currency. So let me launch into Rajat and seek your views on that as a banker, and more importantly, what do you think would be the impact to the Indian financial system?
Well, I think CBDC was in the works for quite a while, and the regulator has been very keen to be, leading that space across the world. So, cuts out friction costs. It increases transparency in the economy. It perhaps tries to hit at the root of both the efficiency but also the transparency of the economy. So certainly, it's a great initiative, and hopefully we'll see it. I think that the other part, which was sort of unsaid, was around crypto and other assets, which it wasn't explicitly mentioned. It was talk about other, I think it was other digital assets was the term used, and people are construing it to mean crypto, etc. So hopefully you'll see the bills coming in on that and clarifying exactly what they mean. I mean, there's a large number of people already investing in them in very small amounts across the country. So I think that level of clarity as to what are digital assets, what's the fiat digital asset, and how that will be treated versus other digital assets. I think that clarity is quite important, and it's been in the works for too long. It should come out very clearly and out in the open in that. I think just whilst you haven't asked that, I'd just say that some of the other initiatives around digitization of the financial sector, there was one initiative around the post office, linking of 150,000 something. I don't remember the exact number. I think that's a good initiative. So you can see that the India stack, which has driven all the innovation around financial services, can provide quite a good backdrop to to the ease and the familiarity that people have with technology. So because of India's stack, I think the central bank currency has a good chance of succeeding and of people accepting and adopting it very quickly, much faster than we think that they will.
Right, and I think again it's important to note that, as you rightly mentioned, the digitization thrust in most of these announcements obviously is going to go a long way in helping this kind of get better over a period of time. I'm sure we're going to have a lot of questions from our friends in the audience, but if I may just get into the last part of the questions that I had prepared, to be honest, for you, and then hopefully move to some more question and answers which are live, is Pranjul, honestly, in a nutshell, what are the top 3 wins from the budget and why? You did mention the top 3 aspects prior to when you wanted the budget announced, and very clearly said that 2 of them are ticked off, but if you could elaborate a bit more, that would help the audience too.
Yeah, sure. So look, I think the number one is what I mentioned, which is I think there is some sort of credibility, tax stability, continuation in the fiscal, bringing down the fiscal deficit path. They basically had announced that they would want to bring down the fiscal deficit by 0.5% of GDP every year, and they sort of, on that path. Transparency of accounts. They've been putting a lot of bottom of the account. Bottom of the line items, top of the line. So some transparency has come over time. So the whole credibility, stability, predictability angle was intact. And I think that is good for an investment sort of environment. So that was my number 1 win. My number 2 win is actually something which people are not really talking about: fiscal federalism. The fact that the center has reached out to the states, giving them, interest, 1 trillion rupees worth of interest-free loans for capex at a time when the center itself doesn't have, too much room to spend, and telling the states that, look, you can spend it on any kind of capex, not telling them you have to do this or that. I think this is good. It sort of shows respect from the center's perspective to the states, and the confidence it builds in the relationship will become very necessary, because a lot of reforms we do, for instance, improving the GST, ease of doing business, actually needs the cooperation of states. States are eventually a bigger player than even the center. So if center can build confidence over time, then that's something good. And I think that was another win. And the third win is innovation. I think, Rajat has already spoken about it, but there were a lot of innovative ideas. Look, innovative ideas don't fly immediately, but you need to keep persevering, and it's good to find a space in a budget document. The CBDC is good, lots of benefits, cross-border transactions, interbank settlements, even for financial inclusion, especially if you want to make it programmable. You want to, give money to the bottom of the pyramid, but make sure they use it for the right thing. So there are a lot of sort of benefits, and of course, it's a very evolving area, but it's good that our country is also starting to experiment there. And then there were a lot of other innovative schemes like the battery swapping infrastructure, green sovereign bonds, 5G auction, drone as a service. And, just taking a step back, this actually plays to our strengths. Our strength is a very young entrepreneurial labor force, which is burgeoning over the last 2-3 years. For the first time, they're getting access to a lot of money, VC, PE funding. 50% of FDI is now digital instead of physical. $80 billion of inflows have been seen in digital startups over the last 5 years. If you give them great ideas and policy support to play with, I think that is a very, big thing that we can have. At the end of the day, it was an entrepreneurial spirit that was a secret source of growth in the US for many decades. So, if you're going to cultivate that through innovative ideas, I think that's a great idea. So that's my sort of third win from the budget.
Excellent. And very quickly, because I can see a flurry of questions coming towards you, Pranjul, immediately. But if I may request Rajat to quickly answer the same, the top 3 wins, Rajat, from your perspective.
Yeah, I think it's difficult to top Pranjul after that, but I will say that it is on the whole a very bold budget in terms of the spend that it is talking about. It could have taken a more conservative view of fiscal deficit and the spend and all of those things at this point in time. It could have talked more about be important, but maintenance kind of activities more than capex. So in that sense, I think there is quite a bold budget, and probably the capex initiatives and the digital initiative that you're going to see will be less prominent in the next budget. That's just a hypothesis, but that's what I feel. So they had some space to do this in this period of time, and political space, I would say, and they've done that. So I actually think it's quite a bold budget in the circumstances. I think the other thing which we've all mentioned a few times is the fact that what you don't want in the budget is any nasty surprises, any lack of clarity. You want more stability, you want more transparency. The market wants that, companies want that, and I think by and large that agenda has been furthered. I think whilst there's not a lot on the social space and NREGA, as Pranjul has mentioned, I think there is something in it for the MSMEs, which for me is the third take. Now, the guarantee scheme, the ECLGS scheme, is only minorly increased by 50,000 crores to 5 lakh crores. But 5 lakh crores is a large sum of money given the organized MSME borrowing market may not be a very large multiple of that. The other thing that they've spoken about, but I don't have the details of that, is this scheme called the CDT scheme for MSMEs, which they're saying they will revamp. It's a very old scheme. It's going on for a very long time. Its drawl is only a 1 lakh crore. They're talking about 2 lakh crore additional. So that could be a multiplier, but you have to understand the details of that. I don't fully know what they're trying to do. So I do think that there is an element of trying to increase the job creation through MSMEs as well. Clearly, the government recognizes that that's where job creation will come from, not from large industries alone. I mean, most of the employment will come from MSMEs. So I'm actually hopeful that more will follow on that scope. I mean, and the budget kind of sets certain standards. It may not have been very prominent in the budget, but I'm hoping, and I do believe that there'll be some effort on that. So I would, by and large, I would say that, I mean, there's some very good things that have happened through this budget.
Excellent, Rajat. Now, Pranjul and Rajat, thank you so much for sharing those invaluable views of on the union budget. And we're going to launch into a number of questions that our friends on this on the webinar have asked. So let me start off with you, Pranjul. Two related questions. Rohit and Madhusudan have asked. One, Rohit is asking a bit about how realistic do you believe the deficit number of 6.4% projected for FY23 is? And he goes on to ask that it's in line with the fact that the disinvestment targets are slipping most of the time. So, A, how realistic do you think it is? And B, a second part of that is Madhusudan is asking, how do you think this would impact the interest rate scenario due to the continued fiscal deficit?
No, great questions. So there are like two numbers that came out, right? The fiscal deficit for FY22, which is the year ending March 22, which was 6.9% of GDP, then going down to 6.4% of GDP in FY23. And actually the two are related. My sense is that this 6.9 for this year can come out actually much lower. What they've done is that for the Jan to March quarter, they've completely underestimated the tax revenue inflows. So they've basically estimated that taxes will grow minus 15% year on year, Jan to March. And the run rate so far has been a positive 44% year on year. Like even when I married with Omicron and all of that, I don't see such a big fall in taxes between Jan and March. I think we'll surprise on the upside on tax revenues between Jan to March, and the fiscal deficit will be pushed lower. And instead of 6.9, it will be about 6.6. So that's going to be the starting point. And this is important. I'm going to come back to why it's important. Moving to FY23, 6.4. I may have some small squibbles here and there, but 6.4 broadly seems realistic to me. On the revenue side, they have much lower tax buoyancy from much over 1 to just under 1. And I think this is fair. They've cut oil taxes and the full year's impact will show up only in FY23. So I think that's fair. They have been extremely realistic in their privatization targets this time for the first time in a decade. They've only penciled in 650 billion rupees coming out of disinvestments in FY23. Remember, every year they talk about 2 trillion rupees, and at the end of the year, they're never able to get it done. So I'm happy that they have gone in conservatively and they could surprise on the upside rather than, a surprise on the downside. So I'm happy with the revenue side. On the expenditure side, as I had mentioned at the start, I think the capex is doable because this time the implementation burden will be shared by the center and the state. So that is fine too. Some places where I think there is a slip is subsidies, particularly fertilizer subsidy. They have it coming down by 25% year on year at a time when fertilizer prices across the world are soaring. So I think they'll have to end up spending much more there. But will that raise the 6.4% fiscal deficit number? Not really, for the simple reason that there are a lot of buffers in the system. The biggest buffer being that they've gone into the budget with a very conservative nominal GDP growth projection, only 11.1%. Our own sense is that it could be closer to about 12.5%, which means that there could be higher tax revenues, which help fund some of these fertilizer, expenditure. So small quibbles here and there, but overall, I think 6.4 is achievable. Now, I think the bigger question here, and you also alluded to it in the second part of your question, is what is the impact on bond yields and the bond market interest rates? They have, Gaurav, if you would have asked me that how would you do anything different if this was your budget, I would have said that I would have been kinder to the bond market, because they have come up with a borrowing number of 15 trillion rupees, and the bond market is, in one word, in shock. This was just not expected. The truth is, they could have made the tax revenue numbers a little realistic. They could have easily pushed it down from 15 trillion to about 13.5 trillion. My own sense is that they will eventually end up borrowing lesser than 15 trillion, 13 to 13.5 trillion, for the simple reason that FY22 deficit is going to come in lower. I mentioned that, and that could be some cash saving, which can be pushed into FY23 and help the deficit to a large extent, and the borrowing to some extent. So 15 trillion could probably come down to 13.5 trillion. So this is like sort of some comfort for the bond market. I think the only problem is, why didn't they announce it early on? And that's sort of my one quibble with this budget. But even 13.5 trillion is a big number at a time when RBI support may not be too much. RBI may not be wanting to buy too many bonds. Globally, interest rates are on the rise. Liquidity is on the fall. So generally, some pressure in the bond market is going to continue, even if the borrowing comes in a little lesser than 15 trillion rupees.
So Pranjul, in a nutshell, you believe that, just to answer the question on the interest rate scenario, you do believe that there could be a rising interest rate scenario?
Oh, yes. Globally, interest rates are rising, inflation is rising, central banks are hiking policy rates. RBI will probably go slower than they should, but still they'll have to hike rates at some point. And also we have a large borrowing calendar. So there will be some rise in interest rates, which we have to sort of gear up for.
Excellent. Because, sorry, Rajat, please.
The tax collection, the GST collections in January was, in the last 1 or 2 months, I think, has been successively increasing quite dramatically. Do you think, and perhaps that's to your point, that this is bearish, the view of how much tax collection would be there in this quarter? But what is leading to this very significant growth in taxes? Just coming out of the Omicron, or is there something more to it?
Yeah, so look, coming out of the Omicron, there was a huge pent-up goods demand. The sad part is that we imported most of the things we bought, the goods we bought. We didn't produce it domestically. That's a sad part. But the positive part is that we still tax them, So GST collections on the back of imports, which we see under the IGCST, that actually grew very rapidly. So basically, yes, there was a lot of pent-up goods demand, and that led to high GST collections. That's something that happened. But the other part to it is that there are also some structural improvements that are coming on the GST technological sort of backbone. And one thing is that they have moved from a system of invoice matching to a system of single invoicing. So when you do single invoicing, it's easier to sort of catch tax evasion. And I think that is something that has really helped, and that has been a technological innovation that's positive. If your question is, will this increased, big rise in GST continue? I think if you want it to continue from here, you need to do more reforms, more improvements. And one other improvement that is waiting to happen is correcting an inverted tax structure that we have in GST right now. They tried to do it in January, but I think there was some negative press around it. So I think it's sort of being put in the cold storage for now. I hope they pull it back, towards the next couple of months, and we can see continued reform of the GST regime.
Okay, got that. Thanks.
No, thank you for that. Pranjul, I just want to, I'm going to move to Rajat for a question that Nipul has asked. But just before that, Vishal has further commented upon the risk of global inflation and crude prices on the fiscal deficit. I think you did answer it in a part, but yes, it is an important item to be considered about, right?
It is, absolutely. But my bigger worry here is the impact of all of this on inflation and monetary policy. You see, this is a very important time. Global central banks are tightening up. And when they tighten up, investors become very selective about the emerging market they want to be at. They start becoming very selective, choosy. They want to be in emerging markets where they think the macro house is in order, right? And if in such a scenario, there is a perception that India's inflation could rise, but the RBI is not doing anything about it, it's falling a little behind the curve, then you don't want to be in that place. I'm not saying it's happening, but I'm just saying you don't want to avoid that situation. So keeping that in mind, the RBI would have liked to tighten monetary policy a little bit, gradually, a little bit, but they would have wanted to do that. But the fiscal has created a problem for them. The fiscal, with its large borrowing, has sort of made the RBI a little nervous, because the bond markets are very worried about this large borrowing. And now on top of that, if RBI also starts tightening monetary policy, bond markets will get a little bit panicky. So I think what the RBI will end up doing is delaying some of the monetary policy tightening process. And I think this has basically, in a nutshell, been the impact of the fiscal on the monetary.
Excellent, thank you. Rajat, I think on the central bank digital currency piece, I think Nipul really wants to get your perspective around. Do you think this will change how conventional banking gets done in India?
Sure, I'll try to give my answer to them. Pranjul, please feel free to add to me. I think, look, the obvious benefit which a layperson would agree with is that the costs of currency would come down, and the efficiency and the transparency would go up, right? That's kind of the obvious benefit. But there's many other benefits. There are a lot of social benefits to CBDC. For instance, the first social benefit would be like, if you remember, in the olden days, we used to say that if subsidy is 1 rupee, only 15 or paisa or 20 paisa reaches the beneficiary. Now, with the Jan Dhan accounts and all that, people started saying that, okay, a larger percentage is reaching. But with CBDC, you can make it programmable for the purpose, right? You can say, okay, this is for subsidy of ABCD or fertilizer or whatever it is. And that programmable CBD, the currency can only be used for that purpose, which means it can't be misused, i.e., which means that 100 paisa out of that 100 paisa is going to go to the intended beneficiary. So it's kind of taking the social sort of framework where we do have a lot of subsidies certainly for our rural population and maybe semi-urban population as well. So they will be a big beneficiary of this, which is fantastic. I think financial inclusion would benefit as well, because you have network issues in rural areas, and you can have offline technology, which is already there in parts of the world, where you can link with where instruments are close to each other. You can do wallet transfers, etc. But it's not just the social side or the efficiency side of things. There's obviously the traceability and the transparency of this that will be beneficial. Just from a commercial, in very international corporate commercial banks that we are, this is the way the world is moving. So you can't stay away. Ultimately, you would hope that CBDCs would be connected to each other across the world, and which is the most frictional payment today in India. It's the import payment, right, or the payment for cross-border transactions. And hopefully, when you have CBDCs in India and in other major geographies of the world, and they can speak to each other through the code that through the crypto or the code that is being built, then you are moving towards a whole institution, not individual blockchain transactions, but you're moving towards a whole money movement system, which is relatively much less friction or no friction. So that is probably a very deep end use of that as well. So, I mean, there is no choice. We have to move towards CBDC. The faster we move and the better technology we adapt, the better it is for the country on every count.
Absolutely. I think it's rightly said. These are all important enablers to make sure banking gets a lot more simpler and far-reaching from that perspective. But just keeping the whole social theme, Amar Mohan has asked a fairly important question around the fact that, to Pranjul, that you did speak about drop in social expenses by the government of India. But in your opinion, from which area could the government have cut some budget to fund the social welfare schemes that you think that are as important as you've articulated?
Yeah, look, that's a great question, and I'm very happy I have an answer to that. I think eventually, I like the thrust of the budget, on the whole, but eventually how this budget pans out could be slightly different. I think eventually what we'll see is slightly, more money for NREGA, social welfare schemes. Exactly what happened last year. Their budget estimate was small. Over the 12 months, they realized there's a lot of demand, so they increased allocation for NREGA. I think the same thing will happen this time around. Where will that money come from? My sense is that money will come from CapEx. That amount that has been made available to states, the interest-free loans, it's 1 trillion. Last year, it was 150 billion. There's a huge scale up. So we really have to see if the states are able to borrow all of that money or not. What if they are, instead of, from 150 billion, they're able to go to 800 billion, not to 1 trillion. Then automatically 200 billion gets available for NREGA. So, I think with this sort of a math, they'll be able to do enough capex as much as the states are capable of doing, but still take out some money to do a little more NREGA. So I think it's possible. One last thing I want to just basically say: why did the government go with a 1 trillion rupee interest-free loans to states? As in, it's a huge increase, 150 billion to 1 trillion. Why did they go with something lower? I think there's a political economy answer to that. What was happening that until last year, the central government was giving about 1 trillion rupees to states in the form of GST compensation. It was supposed to be a 5-year program. From FY23, this program ends. The states have been asking the central government that don't end it, continue it for 3 more years. The center said, we won't continue, but so as to not annoy states so much, they sort of are giving it, but in a different heading, as interest-free loans rather than GST compensation. So the number had to match. What was going away has to be matched by something that's coming in, 1 trillion. But this time the states will have to show full plans of capex. So eventually they may end up taking a little less than 1 trillion.
Thanks for that, Pranjul. Rajendra has asked an interesting one, obviously the favorite comparison of our neighboring country, China, around considering the single-digit GDP growth. Do you think we will be able to catch up with China in the near future, or are we still far away?
That's a question.
Either of you. Either Rajat or Pranjul, whoever prefers.
Pranjul. Go for it.
Well, please, Rajat, all yours.
Yeah, Rajat, all yours.
We don't have to catch up with anybody, in my opinion. We have to do what we have to do for this country. And these comparisons, maybe they serve some purpose, but not a lot of purpose. So the way that I think about it is that there's so much to do, and the base effect in this country is such that certain amount of consumption will drive growth, and the delta that you get over it depends on the policies, on the infrastructure spend, on fiscal and monetary policy, etc., etc. So yeah, I don't really believe in these comparisons. I think we have our own story to tell, and many parts of our economy are telling it quite well. So yeah, I hope that. I don't want to say more on that, but yeah, that's
well said, Rajat. But he does have a second part to this, and Pranjul, for you, he says the large borrowing, 35% up, seems to be on the higher side. And are there more innovative ways to be worked upon to bring in more tax revenue?
Yeah, so look, as I said, the borrowing is very large. What the bond market was hoping for was some push to inclusion of India's domestic bonds into global indices. That is something that is the bond markets asked for the last many quarters, and every time the sense is that we are very close to it, but it doesn't happen. So the bond market was really hoping that some tax changes are made and that process is expedited. And had that announcement come, then I think the reaction of the bond market could have been a little different. So look, that is one thing that can happen over time, that we get included in some global bond indices and we have more inflows into the economy, and foreigners buy more of our G-Secs, and the domestic debt market is not under so much stress. The other thing is that we can also increase our investor base for G-Secs by encouraging retail investment in G-Secs. It's something that has just sort of started in the last year. It's very, very nascent, but over time that is something that could grow as well. So listen, no sort of silver bullets out there. It's tough, but eventually the whole idea is you have to do two things. One is you have to increase your investor base and hope global bond inclusion and more retail participation happens sooner rather than later. And the second thing is the boring thing, that you have to over time keep bringing down the fiscal deficit, because that is the only realistic way in which you reduce borrowing. We have a plan of reducing our fiscal deficit by 0.5% of GDP every year until FY26. In FY23, we've sort of we've walked the footsteps of that plan. So that's a good thing. Increasingly, over the next couple of years, I do think that fiscal consolidation will become tougher because, when you have a very high fiscal deficit, in the beginning, cutting out some of the excesses is easy. But, later on, the consolidation becomes tough because the excesses have already been cut. And now you have to take some even tougher decision. It's going to be tough. But we'll have to just live with it. And I think large borrowings are going to be a theme for long.
Excellent. He just had a second point around where he asked that, do you think there's a more innovative way to increase or bring in more tax revenue?
Yeah, I sort of have a very different view here, and feel free to disagree with me. I think a very few proportion of our population pay the income tax, and our direct tax web has to be widened. I think what we have been doing in the last couple of years is just increasing the threshold. I just feel that that's sort of not the right way to go. You keep your tax rates low at the sort of lower end of the pyramid, but don't exempt from completely paying income tax, because what then happens is that people don't get into a habit of filing returns. You want someone to pay less tax but get into a habit of paying something, so that as that person's income grows over time, that person continues to pay taxes. Now what happens if you exempt a person, then suddenly when the person falls into the bracket where they have to pay tax, they think of all the ways they can evade. So I think changing and raising thresholds has sort of not been the right thing. I think that's sort of very important. But taking a step back, the driver of tax revenues is strong growth. If you can get strong GDP growth, you will get strong tax collection. We saw it in the period 2000 to 2006. And that is the sole mantra at the end of the day, that is sustainable. How do you get strong growth? My sense is that, you can do interest rate cuts, SOPs and all of that are very temporary discussions to have. The real thing is reforms. We are a supply constrained economy. Get some important reforms done, asset monetization, so fiscal finances become better, strengthening the IBC, so balance sheets of banks become more secure over time, having a strong push and a sensible take on the PLI, so that you focus only on export promotion and don't muddle it up with import substitution is a third thing. If you can just get 3-4 reforms done properly, we can gear up for strong GDP growth, which is at the end of the day the sole driver and the most important driver of high tax growth.
Thank you for that. Just going through with the theme on foreign currency, would you have any specific views on the dollar rupee? A friend of ours wants to ask that, and any impact on the whole forex market from the budget announcements?
Yeah, so I think in the short run, the rupee seems like it's slightly more vulnerable, and there could be more volatility for a couple of reasons. Number one, we know that the US is hiking rates. So whenever that happens, a lot of flows go back, to the West. So that is something, that is a period where that can lead to volatility. Second is that our trade deficit has been pretty high. So, that is also something that keeps the rupee a little volatile. And the third thing is that in the budget, a lot of people were thinking that there'll be a bigger push to disinvestment, and we'll see a lot of inflows on the back of that. And
Right.
that somehow didn't seem to be the case. I actually feel it was a very realistic disinvestment number, but perhaps the markets were expecting a bigger number. So these are some things that are going to weigh on the sentiments on the rupee in the short run, but I don't think they're strong enough to weigh over the sort of medium term. I think what we will find towards the end of the year is something completely different. If by then LIC stake sales happen, we start getting inflows, the regular FDI, VCPE inflows that have been strong continue. If we get a bunch of more IPOs happening, that will be good. My own sense is that the trade deficit also could narrow as we move from goods demand to services demand. Then services are not imported, so then our trade deficit will fall as well. So then the sentiment on the rupee could improve towards the second half of the year.
Excellent.
Our FX strategist has a call of 73 to $1 by the end of 2022.
Rajat, you'd like to add anything to that answer?
I would generally agree with Pranjul. I just feel that the inflows of foreign capital have been exceptionally strong, and there's no reason why that growth rate follows historic growth rate. I mean, you've seen VC funds up to $30 billion this year, that if that's the right estimate. Go back 5 years, that would be in single-digit billions. So there's no reason for this to follow a linear curve, at least on the foreign directed. So there may be some offset for the rising interest rate, perhaps. In the next 12, 18 months, you might see that space not necessarily slowing down because innovation can cut through, this kind of innovation can cut through interest rates and other monetary or fiscal issues across the world. So at least I would be a little hopeful on that side.
Right. Well, keep the questions coming in, everybody. We have a few more minutes with Pranjul and Rajat, but I think there's one last one that's coming from Mohesh, which talks about, and you have mentioned that several times, Pranjul, since the start, but he really wants to know why has there been such a conservative approach to the total receipts of 2023 versus 2022 from the government's perspective?
Yeah, no, look, that's a good question, and we can only sort of speculate and sort of try to see what the ministry was thinking. My sense is in FY22 they did something similar. If you sort of rewind, that they came out with a with a very conservative tax revenue estimate, and then later they surprised on the upside. And over the year, the budget was hailed as a very positive and credible budget, because people want to be surprised on the upside through a year where every other surprise is to the downside. And this sort of strategy of the budget, go in conservatively and then surprise on the upside and end the year as a winner, is something that was sort of lauded. And I did myself attend some of the meetings with the finance minister on recommendations of the budget, and practically everybody was just lauding that you surprised on the upside. Generally in budgets we surprise on the downside in our country. So I think that is a strategy they wanted to follow this year as well. So I think that's my one answer to your question. The second answer to your question is that, look, they had promised last year that every year they'll bring down the fiscal deficit by 0.5% of GDP. So I think that is the reason why for FY22 they've pegged the fiscal deficit as 6.9 and not 6.6, as I think it will end up being, because the journey then from 6.9 to 6.4 is exactly a 0.5% of GDP consolidation, which they had promised. So in a way, it's for them to sort of show that they're living with their promise, that they're doing the 0.5% of GDP consolidation. So they had to keep this 0.5 wedge. That is one reason why they kept the FY22 number a little elevated.
Excellent. Listen, I think we've had a great conversation over the last 50 minutes. We'd actually get 45, but it's good that we've kind of gone past. I don't see any further questions coming in, but everybody, whoever has a question, please do bring it in. We'd be very happy to answer it even offline once as and when you have any specific questions for either Rajat or Pranjul. I'm not going to leave you, Pranjul, without saying rate it 1 to 10. Come on, both you and Rajat. Let's get your magic number. Yeah,
look, I don't like it, but even before you asked, I gave you something, right? I said that yes. I went with 3 expectations: credibility, capex, and social welfare spending. And I think they did well on the first 2. Let's put it there.
All right, very diplomatic, I must say. Rajat, a slightly more straight battered one from you on a number.
I don't know. I would say maybe 7.5.
Little higher than me.
Just to put it in the top quartile. That's all. Yeah, I think there's some good things.
All right. No, thank you so much, Pranjul, and thank you so much, Rajat, to have spent time and given us your insights. And more importantly, thank you to all our friends who have actually taken our time and joined us this morning. I hope you found this relevant from your perspectives. And again, reiterate, if you have any specific questions, please do email them to us and we'd be happy to get them answered. Thank you, everybody, for your time.
Thank you.
Thank you. Bye.
Thanks.